name is Maryam Rasheed. I'm a senior research analyst with Economist Impact's Policy and Insights team here in Dubai. And I will be your moderator for this afternoon as we delve a little deeper into finding that sweet spot between regulation and governance as well as innovation. We're joined here by our four wonderful panelists. I wanted to give them the opportunity to introduce themselves very briefly, along with how they, in their roles, interact with regulatory bodies or regulations as we discussed. Yes.
Hi, Rene Michau here. I'm the Global Head of Digital Assets for Standard Chartered. I think what's interesting for us, we're a 160-year-old institution, and the digital asset agenda for us has really been progressing since 2016 when we took an investment in Ripple, and then we've also worked through establishing a very comprehensive risk framework within the organisation to be able to deal with crypto risk and digital asset risk. And we've launched several businesses in the space, and we've got more products coming to market. But I think what's interesting for us is two things. One is we don't really have a religious view on crypto or digital assets. What we do have is a set of clients, particularly institutional clients, who are asking us for access to new asset classes and asking us to help them access those in a responsible way and in a well risk-managed way. So for us, I think it's also, in that context, really interesting that the way that digital assets has captured the attention of regulators and central banks across the world, and which has accelerated massively since the launch of the Libra white paper several years ago, is like the dialogue is so intense and so broad across all of the regulators and central banks. And so what's really helpful is we get to be part of that. There's a huge industry to regulator dialogue and vice versa. And I think we've got so many interesting problems to solve. And I guess that's why this is an exciting topic for this panel.
Thank you. Jigar?
Hi, Jigar Patel. I'm the Global Head of FinTech and Internet for Morgan Stanley. In terms of the balancing act with regulation and what I do in my role, it's really coming across regulation when advising companies. So advising companies on raising capital, whether it's private or public, and then in mergers and acquisitions. And it becomes a very important topic, even though I am not setting the policy. It's interpreting the policy, how it's going to impact these business models, how do you box the risk to get investors ultimately comfortable to invest in these companies, and that there is an existential risk in these business models.
Yulia?
Firstly, thank you for the invitation, and I believe that me and Ria, we will be the evidence that we are not some kind of strange animals coming from the regulatory world. And for me, it's this topic very important because I think there is a balance between all stakeholders. To find the regulations about the FinTech, it's very similar like this story how somebody tried to catch the dog for its tails, but it's reasonable. But we need to define what should be the content of regulation and how big and strong will be regulation. But in the case, the regulation to make the market more trustful and transparent, I think that is for the interest all of participants, and I can assure you that we are open to listening to you, and I believe that it's one of the potential place to collect the information.
Thank you, Yulia. Rio?
Sure. So I am Ryosuke Ushida, Chief FinTech Officer of Japan Financial Service Agency, which is an integrated regulator in Japan. And then we are not enemy to innovation, and then rather we try to be a friendly regulator to innovation as long as the compliance is met. So we had an interesting discussion in the previous panel on how we can TradFi and then digital assets can work together. So it's kind of scary because some risks of digital assets could be propagated to TradFi, but some TradFi expert on compliance could bring good governance to DeFi world. So we are looking forward to more discussion and then good collaboration among regulators and then TradFi and DeFi. Thanks.
TradFi risk can go the other way too.
Thank you for so much. I'm so glad that I'm able to moderate this conversation with so much diversity in opinion and such strong opinions as well. And I thought we could start with a little bit of a numbers game. So earlier this year, the World Economic Forum released a paper that looked at the global fintech space and found that a majority of fintechs globally do largely hold a positive view of their regulatory environment. I think about 38% identified the regulatory environment as a major supporting factor in how they were operating and how they were growing, which is incredibly encouraging. However, the regulatory landscape does have a heavy lift here. It does need to encompass things like compliance and consumer protection, data privacy, sandboxes, the gamut of it. In the UAE, we're seeing, while investments dipped a little bit last year globally, we really saw it soar here, and we're really seeing this momentum, and we're seeing this increase in interconnectivity. And I think that this is a great time to sort of talk about sort of matching that regulation with something that is growing exponentially. And so I think it would be a good place to start if we could go around and just talk about, in your perspectives very briefly, how would you characterize the ideal balance between regulatory involvement and innovation? Would you sort of lean towards a hands-off approach, a case-by-case approach, something that's a structured experimental approach? Maybe, Rene, you can start the ball rolling.
Sure. Look, one of the interesting things about this space is, if you look at the major bodies of regulatory change, particularly around banking, but also around FinTech, over the last few decades, most of them have been driven by a very specific systemic failure and have been designed to regulate to prevent a recurrence of that failure, right? So whether that's the new Basel regulations as a result of the GFC, whether it was the previous versions of Basel, whatever the case may be, Dodd-Frank, etc. What's interesting about the digital asset space is there has not been a systemic failure in the traditional finance industry. And we still have all of our central banks and regulators working very hard to try and write regulation. The other thing that's interesting about that is, historically, banks have been in the penalty box, right? So for whatever reason, we've done things which perhaps we could have done better. And as a result, we've largely been excluded from the regulatory discussions on some of those major regulations. So when we look at the evolvement of regulation now, I think that, there's two really important things. One is this ideal of having public-private consultation and having deep engagement between regulated firms and regulators. And we see that across a lot of markets. The two regulators represented here on stage are great examples of that, as are the regulators within the UAE. But the other thing that's really interesting, though, is it creates an interesting problem. So if you look at BCBS BCBS D545, which is the capital requirements standard released by the BCBS for regulators to implement. It's good because there's a regulation, but there are a lot of things that I think could that discourage regulated institutions from providing safe access to assets that clients want access to. So what we're seeing is an ongoing dialogue of that. I'll probably reference that regulation or that regulatory standard a bit during this session. But so ultimately for me, I think now is the best time for us to be having really open dialogue. I think banks in particular have a responsibility to lean into regulation, not wait for the regulators to come up with all of the rules before we move, but to look at what are the commercial opportunities that we face, and how would we operate those businesses if there was regulation, and then go and have that conversation with our regulators as we progress through that. I think that we need to be courageous and we need to be leaning into that.
I like that messaging. Jigar?
I would focus on, look, the regulatory inertia is never going to be perfect. I always had a business school professor that talked about regulation lags and it always overcorrects, which does tend to happen from time to time. But so it won't be perfect, but the balancing act is really around, can the regulatory bodies around the world be coordinated? Yeah. And so can you have some type of global standard and then local tailoring? So what does that mean? If you go back and look at the banking system coming out of the financial crisis, you had really the evolution of the Basel capital rules, and I think now we're on Basel III of the iteration being implemented. So that's a global standard for the most part. And then you have each regulator, whether it's the US or the EU or the UK, then adopting the local tweaks to say, in this economy, we're going to go with this type of interpretation of Basel and overlay this type of capital buffer. And I think that is very important because having a global standard, just like if you commit a crime, you launder money, it's a global no-no, right? Doesn't matter what jurisdiction you're in. And if you go back to If we were to use digital assets as an example, the different regulators around the world had different policies. And what you saw was, particularly in the US, many of these institutions were located in the Caribbean or just abroad, but then trying to do business in the US.
Yeah.
And when you had some of the more prominent failures, it was a bit of a black eye on the regulators because it was hey, if you had some type of standard, you wouldn't have had this, bad actors overseas trying to operate in the US. And so I think the focus is that the balance will never be perfect, but we can try to achieve perfection, and there should be a global standard with local tailoring.
Yulia?
From my point of view, balance is coming from the wide discussion. We should listening on time. It's too late to start to complain for the content of the regulation if the regulation is approved. The real standard setting should came from the close connection between the all stakeholders, and every participants of this discussion should to clearly explain what is the expectation. Because that we call it the way to the hell, it's full of the good idea, and we should to discuss about the details. But as I mentioned, if we are able to find some consensus about the basic principle, like to increase of transparency, to have a clear pre-contractual informations, to have a reasonable regulation to clean the markets, now we can continue with how to manage it. And I think that this is the way how to make the good regulation. And last but not least, I agree with, we partially listen what was mentioned in the previous panel. I think that we as the regulators could be as much transparent as is possible. Because sometimes we say that principal regulation is enough, but if you have a totally different opinion in one side, what the principle mean, and what the other side, what the principle means, is the beginning of the war. And I think that dialogue is the way how to solve the situation, and this is our way of the approach how to manage.
Rio, in your opinion?
Thanks. So it's a moving target because technology is changing, and then business application is changing. So yeah, it should be good. We have a principle-based regulation, but it could be trade-off sometimes between principle-based regulation and then clarity, because principle-based it's a risk-based approach, and then you have to think about risks, and then you have to take risk mitigation measures as necessary. But there's no kind of checkbox of what you can do or you cannot do. So it's quite difficult and then challenging even for regulators, because we don't have checklist. We have to have a discussion with regulated entity, and then we have to find a middle ground about what is good for innovation and then what should be permitted and prohibited. So yeah, as Julia mentioned, we need a more discussion, dialogue with private sector experts.
I like that idea of that moving target, because I think that ultimately it does boil down to that. And I'm interested to hear from you, Jigar, given the fact that you sort of operate as this middleman in the discussion here, in terms of how tech is really keeping in pace with regulations. Like, where is that gap arising? And in your opinion, where does the bridge fall?
So, the mantra in tech and in startups tends to be move fast, break things. That mantra still holds, but you don't want to break regulations, right? Because it can come back with repercussions. And so, I see the mantra hold within tech is forward-thinking companies that are forming, and even existing ones, they're really challenging the notion of, hey, here's an existing regulatory framework. Now I innovated this product. I think the regulation needs to catch up. So I'll give you an example of it. Buy now, pay later, right? It's a global phenomena. Every country has some sort of a buy now, pay later player now. And in certain jurisdictions and regulators have taken the view that if a buy now, pay later originator is not doing hard credit underwriting, it's not a loan, right? Because it's, in some cases, it's a member base. So if you default or you don't pay, you can't take out another loan.
Okay.
And so some regulators take the view, well, it is a loan. Others saying it's burdening consumer debt. But then you actually ask the consumers, and the consumer is saying, this is so much better than a credit card.
Yeah.
Because instead of having revolving interest and all these punitive hidden fees that I can't read, I can actually manage my cash flow to how I'm actually getting paid. And so, now with the advent of buy now, pay later, it's forced the regulators to go back and take a look at what is the concept of a loan.
Right.
And so I think, it's beholden on tech companies to not necessarily break the rules, but really start challenging that the concept of what is a loan or what is a commodity or what is a security or what is a pre-existing framework just doesn't apply.
Mm-hmm. And I think that sort of leads us into that conversation of those challenges quite neatly. And I'm curious to start talking about the regulatory headwinds that we're experiencing. So, Rene, if you could just speak to a little bit the regulatory headwinds that you've experienced in your role that you think are sort of either causing this massive divide or really not helping the environment, or what do we need to prioritize when it comes to sort of making amends there?
Yeah, thanks for asking me to say mean things about my regulators. So, which I'm not going to do, but I do want to draw attention to a really interesting construct around the way that regulators and enforcement agencies sometimes think about these things. So, in every market, you've got a set of banks with the largest balance sheets that are deeply integrated into the economy. And so we've seen in some markets that there's a tendency for those incumbents to not want to expend the capital and energy to develop capability to get good at new risks. So I'm going to use the US as an example, but I don't want to be unkind to the US because I think there's a lot of driving factors around the situation. And I think it's worthwhile reflecting on what happened with Silicon Valley Bank and a couple of the other banks in the US last year. So during the Industrial Revolution, we were able to write loans to very innovative firms very early in their life cycles because we could account in the accounting rules for the value of the underlying assets, machinery, trains, all that sort of equipment, right? When it came to the information revolution, the accounting standards for intellectual property, which is the primary asset for FinTech startups or tech startups, didn't allow banks to really account for that effectively on the balance sheet. So that's where we saw the birth of VC, right? So venture capital, because they were able to take a look at the IP, put a value on that, and then lend. This then resulted in a whole bunch of firms which didn't need to borrow, but needed deposit accounts. And so without going into all of the reasons that led up to that, you then had a mid-tier bank in Silicon Valley that agreed to work with a lot of these firms. They ended up with a very large deposit base, right? We know how that story ends in that, there was a mismatch at a point in time between assets and liabilities, which caused the issues at the bank. But similar to that, you also had the emergence of crypto and digital asset firms. And understandably, in order to protect the stability of those major banks in any jurisdiction, sometimes the regulator will take a posture which discourages those large regulated institutions from taking on that new risk. Now, the challenge with that is then somebody's going to take on that risk. And so in the case of the US, we saw Silicon Valley Bank, Signature and Silvergate agree to take on that risk. But what that meant was we ended up with a systemic concentration of high-risk industries in smaller balance sheet institutions within the economy that ultimately created an unforeseen systemic risk. And so I think what that kind of results in sometimes, and I'm not going to say that this is exactly how it was in the US, because as I said, there's lots of other driving factors as well, but this same kind of pattern exists in many economies where you have a small tier bank or mid-tier bank with a high concentration of very innovative firms. And so they start to develop the tools around managing that risk. But what that means is in an attempt to protect stability, you actually create a systemic risk and give the incumbent banks a free pass from developing the risk infrastructure that they need to support that high-risk sector. So I guess that what I want to draw out of this is I think that the idea of institutions taking risk shouldn't be the thing that regulators are against. The idea should be we want the large balance sheet incumbent institutions that are integrated into the economy to be investing and developing the capability to effectively manage risk for emerging technologies and emerging capability. This is true for crypto, it's true for AI, it's true for all of these things. so that you have that risk distributed across the economy and you're not driving shocks into the financial system. So I think to me that's something that we can all get better at, and it does rely on what our my colleagues on stage here and earlier in the day have talked about, which is deepening that dialogue between the industry participants.
I think I feel like I came here looking for a little bit of an argument and looking for a little bit of controversy, and then I realized I have that here with this panel. And so I want to give Yulia and Rio both the opportunity to respond to that and to sort of reflect on that, thinking of systemic risk and whether you see it that way and whether there is a sort of middle ground with finding a common risk appetite.
Look, we like the supervisors, central bankers who have a wide experience with systemic risk. We spend a lot of hours and a lot of expertise how to identify the systemic risk, how to manage the risk, how to mitigate the risk. But is it fair to declare that the core risks are changing? What used to be core risk or the main risk a few years ago could be totally replacing. I give you the example, for example, some cyber risk. That is something what for the last few years was heavily increasing, and it could be systemic. Also the size of the institution. What could be the systemic risk in one jurisdiction? It cannot be risk, it's unimportant in the other jurisdictions. That's about the size, about the concentration, but I think that we should to try to understand and try to mitigate. And as I mentioned, that if we miss this opportunity, we can lose the confidence, and it's too risky for all participants and stakeholders, because the trust and the confidence is, I think, most valuable assets which we hold.
Right.
And I think that is also reasonable to take some lesson learned from the previous regulations that in Europe we are the pioneer, that I don't want to advocate that everything is the best solution or best one, but I think that they give us the evidence that it's some kind of evolutions, that people lose these averse and try to slowly accept that we can live together in some reasonable, transparent relationship. And if some new entities are coming in the market, it doesn't mean that it's the animals which want to kill my trade or my business. And I think that is a positive message.
Yeah. Ria, I wanted to just ask, so in light of that, is that a sentiment that you agree with? And also in terms of looking at the regulatory headwinds that the regulators are experiencing, does that differ very much from sort of finding that common risk appetite? Are there other headwinds that you're seeing?
Sure. So I think a good example is an FTX case. And then we have introduced crypto asset regulation back in 2016. And then in 2018, we have updated that. And then we introduced so-called cold wallet requirements. So it's more than 90% of customers' crypto assets needed to store in offline environment. And then after that, industry has been criticizing us very much because it's too strict, so it could stifle innovation very much. But when FTX incident happened, FTX Japan customers was protected because of this regulation. So industry's kind of perception has kind of changed, and it seems some other countries are trying to introduce similar regulations. So I think learning from this incident, it's important to listen to the voice of industry, but regulators have to think about financial stability and risk, because that is something only regulators could have responsibilities, because it's macro prudential issues. So I think we have to strike a balance between hearing voice from industry and think by ourselves as a regulator.
I think that seems fair. And Jigar, I wanted to ask you, given this discussion that we're having, all of the entities involved on the regulatory side and on the financial institution side, are we seeing any stakeholders sort of refrain or be more apprehensive of having this conversation and finding this middle ground, that are more reluctant to sort of lean in or engage with other stakeholders within this landscape?
I don't think you're seeing that. Well, if they are, they're certainly not publicizing it.
Yeah.
if they're, when we talk about all stakeholders, we talk about the companies, we talk about the shareholders, we talk about the employees. I would say, look, from a company perspective, CEOs and founders are 1,000% focused on it. I often hear from CEOs saying when they start a company, the first, other than finding a chief technology officer, the next most important hire is the general counsel, because they're the ones that are interfacing with the regulators. So I wouldn't say, that anyone is reluctant to engage with the regulators. I do think, though, investors, and more so on the public-facing side, have a very discerning view of regulators in the sense that they want clarity. They want clarity. And they're looking for that clarity because it's very difficult to make certain investment decisions if a company's revenue is at risk. So, the case of, if we talk about some of the crypto exchanges and the crypto trading firms, as long as the revenue is not going to zero, but say if a regulation goes in place and all of a sudden they can no longer do a certain type of Bitcoin trading or offering and 10% of the company's revenue goes away, then they can value that. What they can't handle is the revenue goes from 100% to zero because there's some massive change overnight.
That's fair. And I think that leads us very well into what I sort of want to spend some time concluding with, which is to sort of understand, okay, what does a policy playbook look like going forward? Like, what needs to be done? How does the landscape need to evolve? And Rene, I wanted to give you a chance to sort of discuss a little bit in your perspective, what are those key policy elements, instruments, areas that you believe that regulators need to focus on in both the short term as well as in the long term?
Yeah, I mean, so that's a really big piece to cover.
I know, that's why we have 12 minutes to cover it.
So I think there's a heap of regulators around the world that are already kind of building the playbook. I can talk from a digital asset perspective because that's what I focus on, and I can honestly say that like almost every single conversation that I have with a regulator is productive. And why is that the case? And this kind of links to that playbook question. One is that, I mean, as a firm, we believe that it's really important that regulated firms lean into this discussion. We need to come to the table with talent, so people who understand the risks and the products and the clients. We need to come with a well thought out risk management approach and how we think about operating a regulated firm in this context. And we need to show up with an intent that we have commercial value we want to deliver to clients and a view on how we can do that within the regulatory structure, even when there is an absence of regulation or where there's regulatory uncertainty. So I think that I actually see the role of incumbent banks as probably a bit more aggressive than what we see from every bank. Not in a way that you're trying to force an outcome, but we should be taking a leadership role and saying, this is how we would imagine this would work. If you were to write regulation around this, these are the risks we see, this is the things that we want to manage. So I think that's really important. But also see on the, in all of those productive conversations, you have regulators that are also wanting to understand the same thing. So they come to the table with very similar things. They come to the table with talent, they come to the table with curiosity, they come to the table with those priorities around financial stability, consumer protection, and their core roles as regulators, as well as central banks looking at monetary policy, etc. So I think that having those really genuine conversations, which should be robust, we're not always going to agree, I think that's the core of the regulatory playbook, and I do also see think that that's what we're seeing. I think we've got that in the regulators here in the UAE, and we've got that in many of the regulators across the markets where you're seeing activity, particularly around digital assets.
Maryam, do you mind if I add one thing to that?
Go for it.
The other thing I noticed is also, look, people make policy.
Yeah.
And so in some cases, the people need to change. It's not necessarily a particular person,
Yeah.
but oftentimes what you would see is it's a regulator that's been practicing and in the seat for 20, 30, 40 years. This is the way it's been done.
Yeah.
And then, often they'll retire, they'll move into the private sector. And I think now you're beginning to see the next generation of talent. They come out of business school, they come out of school, they work for startups, and they're actually moving into the regulatory agencies,
Yeah.
and they're coming with very forward-thinking mindset too.
Yeah.
And so I think, part of it is that generational shift needs to happen inside some of these regulatory agencies as well.
And their agencies,
That's
like
not to retire
the two,
Julian.
no,
No,
but
that's
that's like the
incredibly
agencies on stage. Like these guys are dealing with the problem day in,
Yeah.
day out, and innovating around that.
And I really like that idea of talent as well, because I think that we're seeing that across the board, every industry we talk to, every conversation we're having about where is it going. And I wanted to give you, Yulia, a chance to, talk about, from your perspective, where are we seeing those policy concentrations? And again, how does regulatory talent and acquiring that regulatory talent play into a solution?
I have a positive lesson learned because we have a very close cooperation with the universities. And I think that you have two main speeder that, or incentives if you try to hiring the people, maybe three. First is definitely salary and reasonable. A lot of people don't want to immediately to be, the director of the globe, but if they have a chance, if you offer them the good team and interesting topic and reasonable salary to be able to survive, it works.
Yeah.
We firstly start, when I take the responsibility for these topics, because it's really fun, it was something new and I like it, and firstly you should share the energy with the people,
Yeah.
with the stakeholder. And we try to organize a seminar, listening, and we have a hubs. And firstly, we hiring the students, and a lot of students send the application. They like to continue. And also the motivation is that you have a chance to have an overview in the beginning, because if you are leaving from the school and you are going directly to the business company, sometimes it's a little bit boring, and you want to see something more wide. And it works. I can tell you that I was also surprised. It's not easy, definitely, because somebody of us mentions that we call it the war against the reasonable stuff, because that's a totally change of the profile that we need. But if we want to have a reasonable dialogue, we need to have a reasonable experience. And what is also too fair, that you should to develop your skills every day. I was graduated from the IT a long time ago, but I still have a nightmare if somebody tell me the details about the new technology. But I think that this is the way to find a partner in the both side, because sometimes it's a conservatism. It's a hidden shame that you don't want to accept some news. But I believe that we bring you some kind of evidence. I try to believe, and I have a confidence that we are listening you. We try to hire new people, and we try to be partner. But if you allow me, I also would like to, a few times we mentioned that the consumer protections, but I think that we should to hold the balance. Because in these stages, we discuss the people who have some reasonable knowledges. But if you compare the financial literacy in a lot of jurisdiction, and now digital financial literacy, I am sure that a lot of your customers are people who are complaints later, are totally lost in the products which they bought. And don't forget, if we don't want to lose the confidence. Sorry that I was a little bit longer.
No. Rio, your perspective?
Yeah, so I'm also optimistic about future talent development, and then I'm leading a FinTech and innovation office, and the majority of my member, my team member is coming from banks, insurance company, and then fintechs, and then central banks as well. Because we have a supervisory colleagues just sitting next to our team in charge of crypto regulation, payment service provider regulation, and then we are engaging with industry. Our mission is to become a bridge between supervisory colleagues and then industry, because some of our colleagues do not understand technology like AI and the blockchain, and then we sometimes see unfortunate conversation between supervisor and industry, because they talk past each other and then they don't understand each other.
Right.
So we try to translate each language to each other. So that's a kind of our function, and then by doing so, we can leverage the kind of expertise coming outside of organization, and then the proper officials like myself could learn by working together with private sector experts. So that's kind of future for the talent development for Japan.
I was looking for controversy, and then now you're ending the note with like collaboration and cooperation. But one thing that I wanted to end with, given the fact that we have these panelists from all over the world, was to sort of sum up in very brief words what the sort of messaging for regulatory bodies in this region, given the way that we're seeing the momentum escalate. What kinds of messaging and what kinds of priorities would you recommend UAE, the region, really focus on in terms of regulating what is so thriving over here? Rene, I'll give you the first word.
Thank you. I think it's starting. I think it's already happening, but to a greater extent, I think I would really advocate alignment across regulators, and I think that creates space. So not down to every detail, but just alignment across the broad principles and the way that the regulation is shaped, the types of firms that are going to be doing business in the region. That creates the economic space for the commercial activity to both start to happen, so that you can see from a regulatory perspective, is the regulation working or does it need to be adjusted? But more importantly, for the economic activity that drives, the jobs that creates, and all of that stuff. So I think that alignment is super important.
I would say some of it's already happening, like the creation of the DIFC having a central hub where companies can be within each other's ecosystems and then collaborate together and then go and talk to the respective government agencies as one voice rather than being dispersed. The other is, I would say, the UAE kind of being a front runner in establishing a Minister of AI in an office. And if you look around many of the other jurisdictions, I think they've now established an Office of FinTech Innovation, which is, probably, it happened in Japan years ago, and it's happening, I think, in the US, it just happened 2 years ago. So for this region, I would say just being very forward-leaning in terms of, you see a technological wave and a trend, establishing even an office or assigning a body to actually deal with it. And, it's not going to be perfect, it's not to make the policy, but it's to actually understand what's going on, and that there's a central voice and a body for people to go to.
Julia?
From my side, the technology don't have a border, and I think that for us it's important to set up some global standards to be transparent and readable for the global player and for the institutions. That is the first reason, first bullet point. Second, it's be as much transparent as is possible, and before every approving the regulation, to spend a reasonable time with the stakeholders. Third, maybe is advice for the market players that sometimes it's reasonable to find one voice, because if the regulatory are using 100 voices with a totally different priority, sometimes its result is not as we expected. And to find the balance, information balance, consumer protection balance, financial stability balance, but I believe that we are in the good way.
I like that you went back to the balancing. Ryo?
Sure. So I think we need a good interoperabilities in terms of technology and then regulation and some business-wise. And then this is first time to come to Dubai and the UAE in 10 years. Okay. I spent 3 years in Istanbul, but at that time I came to Dubai quite often. But it's a kind of different countries, and then there are so many fintechs and then Web3 startups, and even Japanese startups are very active in this country. So definitely we can learn a lot from regulators in this region. And then I am co-chairing Financial Action Task Force, Virtual Asset Contact Group. So UAE became a new member of this group, which is fascinating because we should learn a lot from experiences in this region. So international cooperation is great, and then we are very much looking forward to working together going forward.
Thank you so much for your insights. I love that we sort of ended on this learning note because it really does come down to that. It really does boil down to one, appreciating where everybody sort of stands and finding that common ground and sort of learning perspectives across that common ground. We are at time, so unfortunately we don't have any time for questions. But again, thank you so much for your time. Thank you for attending this afternoon.
Thank you so much.